stop paying off your mortgages? This is probably the number one question I get asked as a financial advisor or financial planner. Should I pay off my mortgage early? I have a theory about this and I need a little bit of help. Let me know in the comments what your background is and if you agree with me. I live in Miami and I'm originally from Nicaragua, so I'm in an area where we're about 95%, 99% probably Hispanic. And I've always wondered, is this a Hispanic thing? Now let's break this down. From a financial standpoint, the answer is almost always no. You should not pay off your mortgage early. And it comes down to two key concepts here. It's arbitrage and opportunity cost. Arbitrage is when you take advantage of the gap between two financial rates. In this case, the gap between your mortgage interest rate and the potential return on your investments. Let's say you have $100,000 in the bank and you also have a $100,000 mortgage at 4%. If you use the cash to pay off the mortgage, obviously you save yourself 4% in interest. But if you invest that money instead, say in SPY or QQQ, I picked these because these are pretty much the most basic investments out there. They've averaged between 10 and 15% annually over the last 20 years. Before we go on, this is an investment advice and you should consider your time horizon and risk profile before investing in any fund. And past performance obviously is not indicative of future performance. So that difference between that 10%, let's use the 10% number on the bottom. You're netting 6% gain in that transaction. Let's summarize. You're paying off a 4% mortgage, but you're giving up that 10% return on the back end. So that 6%, that's your opportunity cost. The money you're giving up by choosing one path or another. Over 10, 15, 20 years, that gap adds up to hundreds of thousands of dollars. But there's more on top of it. Liquidity. When your money is invested or it's in cash, it's accessible. You click a button, you ask your financial advisor to sell it, it's usually available the next day. You can use it for emergencies, business opportunity, or a new investment. If you dump that all into your mortgage, it's tied up. To access it again, you need to refinance, get a HELOC, or figure out a way of borrowing against your home. That's not always quick, easy, or cheap. Now, I know some people just feel better without debt. They were raised that way, maybe it's cultural, maybe it's emotional. That's between you and your therapist. But not all debt is bad. I think this is something that as a society we teach very poorly. We're taught that all debt is bad, but that is not true. Bad debt is bad, but not all debt is bad. Credit cards and car loans, sure, get rid of those. But a low interest mortgage that lets your money grow elsewhere, that can be a powerful wealth building tool. So what do you think? Is this a mindset cultural, or is this just a personal financial myth that won't die? If you have any other of these types of questions, let me know in the comments and I'll be sure to respond. Make sure to follow for more personal finance information.